What is up, everybody? Welcome back to Bitcoin and Markets. My name is Ansel Lindner. Happy July 3rd. Happy July 4th coming up tomorrow. So, hope you guys have plans with friends and family to spend with loved ones on that great holiday. Let's jump right into today's podcast or episode, whatever. This is bitcoinandmarkets.com. Check it out. That's where all my content comes out. Fundamentals report, of course, on Mondays. That's free for everybody. So you just subscribe to the free tier and you'll get that. Also putting out a lot of premium content. This July price forecast competition is very interesting. So if you join and you pay $5 a month, you get a chance to win $20 in sats. We also have a Hall of Fame. So people get their name on the list. We've been doing it since 2019. So going on about almost 5 years now. But you can see the form here for people to get their guesses in. Check that out, bitcoinandmarkets.com. Also writing for bmpro.substack.com. This is my latest, Bitcoin miners, weather market disturbances. And you can see we use data-driven stuff here, but here's an interesting chart that I put out to select miners' performance against BTC in June. So starting in June alone, you can see Bitcoin down 11% here at the bottom. Riot, Marathon, the Valkyrie miner ETF, diversified ETF that includes TSMC and some other Bitcoin miner related stocks are in this ETF as well. Biggest winners here for the month of June were TeraWolf and Core Scientific. So I thought that was an interesting chart. So there are some good reasons to diversify in Bitcoin, especially during periods of uncertainty. But check that out at bmpro.substack.com. Okay, where did I want to go today? Let's take a look at the price chart. So if you guys are regular viewers or listeners to Bitcoin and Markets, last Friday I was having a crisis of confidence. I really was starting to get bearish on this price and concerned for this big breakdown candle. Let's see, what day was that? What day was last week? The 28th. So that was last Friday. So that would be, let's see. This candle is when we were starting to break down past this big dip. And I was like, oh man, this could go pretty far. But we did have a somewhat of a bounce right there over the weekend. And if we look at the CME chart, if we bring that up, where is that? And let's go to the 4 hour so we can see these. How about the 1 hour? So we can see these gaps a little bit better. We did have, it's slow with the live stream in here. We did have this gap back here at the bottom, which we have not yet on CME come to close. They must have closed early today. Did they close early today due to the holiday? They must have, because price right now, spot is 59.7, and this is at 61.20. But we had this dip or this gap here that was closed. And then we had this big gap right here that has been closed now. People were talking about that, but we still never came back and closed this initial gap back here from the 24th. Like I said, right now, spot has closed that gap, but the CME has not registered it yet since for the holiday. Okay, going back to this. Let's take a look at some other macro charts. So if you guys are finding my content for the first time, we talk about Bitcoin, macro, geopolitics, all sorts of stuff. And I bring this into one big macro theory, a macro thesis. I'm writing a revamped version of that on the website now. So hopefully I'll get that out in the next week or two. It's going to go through the 3 Ds of deflation, deglobalization, and demographics. And of course, Bitcoin is the last piece of that. But so we watch a lot of macro stuff here on Bitcoin and Markets as well. So let's take a look at the dollar and go to the daily. Big down day for the dollar here. But still within this range, within this pattern that we've been watching. So nothing super interesting to talk about the dollar right now. Let's take a look at the Japanese yen. This is one thing people were talking about, up at 161, breaking out from the highs. If we go back here to, this is April 29th, this was a big intervention. I think it was $60 billion worth of intervention that they did on the yuan right here to push it back down. And now that we're moving up here, a lot of people are thinking this is going to be causing a lot of pain over there in Japan. But what has happened since April to now is people have had a chance to unwind. People have had a chance to, the banking crisis back from 2023, it was a duration crisis or duration risk. So people were caught with underperforming assets. Now they've had a chance in Japan here to unwind those positions and not be caught on the wrong side of this type of move. So I think there is more room to the upside to go here. Or it's actually inverse, because going higher on this chart is getting weaker for the yen and getting stronger for the dollar. But anyway, there's room to run. I don't know how far, but I could see it going to 165 even before people start really freaking out once again for the yen. But the same thing is happening in the Chinese yuan. If we go here to the Chinese yuan, you can see that it's breaking up to 726.99 right now. A little bit down on the day, but it has been at these levels back here. If I get this into frame, and actually let me maximize that for Telegram. We have this pattern, and that's a 20-day. Let me get the 50-day up here, because that's the one. Okay, so you can see the 50-day was support, then it broke down below. Now it's above it again, acting as support and going higher. It's still not as high as it was back here in 2023, but it is getting weaker despite all of their efforts. So I think this is the main story, the Chinese yuan, and the Japanese yen is kind of a secondary player in this overall move. I've listened to some China experts, and they're like, if the PBOC or the monetary authorities over there in China would just let this thing go, because they're doing everything they can to keep the yuan stronger versus the dollar. Because again, on this chart, going up is weakening. And actually, maybe we should just invert this. So it just continues to weaken. They're doing everything they can to get it to strengthen again, but it's just not working. I've been told that if they just let it go, it could go to 7.5 or even 7.75. There's so much intervention going on in the markets over there, keeping this Chinese yuan from really crashing against the dollar. Of course, that would be devastating for markets around the world, but that's how much pressure is built up in this trading pair right here. And I think that's the overall story for the Chinese yuan and the Japanese yen as kind of a pair of East Asian currencies that are closely linked to each other. Okay, so that's that. Let's go to, and take off the inverted scale. This is the US 10-year. And it came down today quite nicely. A lot of people were talking about this recent bump up, but what I'm expecting as we go into recession, this to just continue downward. And one thing we are starting to see here, I'm just noticing, is somewhat of a parallel channel building here to the downside. So that will be interesting to see how that develops. Again, I would not be, the surprising move would be much higher, okay? Because you need a booming economy to do that. The less surprising thing would be a major crash in the yields or rally in bonds, which we will see as we're going into recession. So until this really breaks down under 4, I would say, Recession is uncertain. Recession timing is uncertain. As soon as this drops below 4, we can start saying that recession is very near, nearer than most people probably think. People think that falling yields are actually stimulative, but that's not the case. Falling yields is a sign of people rushing to safety. So it is a sign that the economy is deteriorating. Okay, so that's that. Let's take a look at oil. I should hide a lot of this stuff, but I just have on here all the OPEC cuts. So let me hide this. And hide that one. All right. So we are above the 50-day moving average, but it's kind of weak. It's below this recent high at the beginning of the Iran-Israel not conflict, but tensions that were back in April. And of course, you have the October peak here. It's amazing how markets can smell these things out and rally into like this war in the Middle East breaks out, Israel, Gaza. But oil had anticipated it. But anyway, even with that, then oil fell, kind of rallied into Iran-Israel tensions, and now it fell again. We'll see what it's rallying into here now, if this is major or if it just continues to fall. One of the things I have been talking about in relation to oil is kind of a decreasing in amplitude. So this chart is very busy. Sorry about that, but I have to use it for right now. We had this bigger amplitude, smaller amplitude, just petering down. And where does that end up? Does that end up with the price rallying hard to the upside, or does that end with price falling down? I think it's most likely that it ends with prices falling down, because recession usually sees a dip in the price of oil. As demand, there is a interruption in demand, and so that should cause prices to fall. So I think the end of this kind of decreasing in this frequency, what's going on here, is going to be a fall to the downside. Okay, S&P 500. Did we hit another all-time high again today? Yes, we did. It's just racing off. Now, this is another one that I've been calling for a long time. In a pre-recession period, S&P 500 is actually seen as a safe haven, because what happens when people are approaching recession and they feel it in their own personal budgets, they feel it in their own personal P&Ls for their businesses or whatever, they are going to be cutting back. They're going to be, instead of maybe hiring a new person, they cut back on spending and they plus up their cash balances or whatever. Individuals will cut down on spending and plus up their retirement savings or their savings. And most of those happen, with stock market type things. And if you are just investing in a passive investing thing where you buy an index fund, most of that goes to the top stocks. So that explains why the top stocks are doing very well. But also why the stock market continues to go higher. Now, there is this pattern that is starting to emerge, or I guess not starting to emerge, but starting to become more evident. And that is a pretty massive rising wedge. Now, this typically would break to the downside, okay? So that's what we have to be watching. When does this break? That break would be significant, and the target would actually be the bottom of the wedge. So all the way down here at 4,100, which would be a massive, massive sell-off in the S&P 500. But when does this happen? Let's see. Let's say it breaks down right up here. So that would be breaking around August and selling off into the end of Q3. So that timing is about right for my end of Q3 crunch time that I like to talk about. But that's what I'm looking at on the S&P 500. Okay, so overall, let's go back to Bitcoin. And that's the milieu that Bitcoin finds itself in. The stock market's rallying, but Bitcoin is not. This is definitely a divergence. A lot of people have tried to tell you over the last couple of years that, oh, Bitcoin is just a 3x NASDAQ play. Okay. Bitcoin is just a 3x NASDAQ play. Well, let's look at, so this is the performance of Bitcoin since March. So let's go back, because we're almost July 4th. Let's go back to March 4th. March, April, May, June, July. So that would be, 4 months ago? And let's see where we're at compared to that. So the Bitcoin price compared to March 4th is down 13%. Okay. Now let's go to NASDAQ. Oh, man. Damn, dude. Since March 4th, right here, we'll go from the open. We'll go from the close, because that's where we went from Bitcoin. So from the close to where it is now at all-time highs, it's up 10%. So Bitcoin is not correlated with the stock market right now. It is not just a 3x NASDAQ play. It's starting to take on some other characteristics, mainly being gold 2.0. It would have characteristics with the US 10-year. Let's go to the US 10-year and see where it has been since March 4th. Right here. And it closed right here. Okay. So it is, remember, going up on this chart is down in price. So the 10-year is down 3.3%. Yields are up 3.3% since March 4th. So that is in the direction of of what Bitcoin is. Okay. So Bitcoin is starting to take on some other characteristics and not be so correlated with the stock market. That's why, yes, you can say over certain periods, the correlation between Bitcoin and stocks are very high, but that's not going to stick. Okay. Bitcoin is going to change. It's going to bob and weave. It's going to take on different things in different periods. It's not only a technology play and a scarcity growth play. It's also a safe haven gold 2.0 play. So it's going to take on different characteristics at different periods wherever the economy is at. And most of that is going to be positive. So overall, as a wash, it's going to be uncorrelated. And the main gains are going to come from adoption. So that's what Bitcoin is all about. Okay, so that's all for the price charts. Let's get into another conversation here. And this is about Ethereum. So mainly, if you guys are just finding my show, mainly this is a Bitcoin only show, but I do talk about altcoins because they are related. They're an affinity scam on Bitcoin. They claim to be like Bitcoin, but they're nothing like Bitcoin. Bitcoin is unique. It's a unique combination of parts. It would be like, okay, so let's just liken I'm going to try to come up with a really bad analogy here. Let's just liken the blockchain, quote unquote, blockchain technology to internal combustion engine. Okay. So now you have Bitcoin, which is a car. And then you take in this internal combustion engine and you put it on a weed whacker or something. And you're like, look, this is blockchain technology, right? But that's not like Bitcoin in any way, shape, or form. It's just using one part of what Bitcoin is. So Bitcoin, and it doesn't say that a weed whacker could act as a car. Bitcoin acts as a currency or money, and these other tokens try to be a money, but they're actually a weed whacker. All right, and so that's how a really bad analogy of how I would describe it. They're affinity scams on Bitcoin. They don't make any sense. Well, they only make sense if you think like a scammer. Okay, but we do talk about some things with altcoins here. for educational purposes, and this is one of them. ETH, of course, is going to start having their their launch of their spot ETH ETFs, and the Bloomberg boys. This is Eric Balkunis and is it James Seifert? They are making predictions of the flows that are going to be seen by the Ethereum ETFs. Of course, they made these same sort of predictions about the Bitcoin ETFs, and they were I think James Seifert was about 8 billion in the first year. We were at 15 billion, so he was about double, half right on that. Even Grayscale Trust, which I think was on the upper end of the guesses, was about 10 billion. And so they were off as well. But anyway, Eric Balkunis and James Seifert, they're talking about the inflows here. I'm going to play this clip, and then I'm going to talk more about it. So let's get into it. If you guys are watching, make sure you like, comment, subscribe. Put a comment down below. Before I play this, actually, let me check the comments, see what anybody's saying out there. What's up, John Delaney, Dex Invictus back with us. What's going on, guys? Put any comments you have in the box there. Okay, E on Telegram says, any comment on recent USDC regulatory approval in Europe? Any impact on USDT? I think I saw a headline about that, but I did not read it. So I don't know the details about USDC. So if you have a link, please share it, and I will at least share it with, forward it on to the Telegram group. And if I have time here today, I'll read through a little bit of it. My basic idea or thoughts on USDC is it's a very regulated, compliant stablecoin. I think it has had some nefarious activity in the past. I think they're behind a lot of the Tether FUD, trying to break down Tether before they come and are released, and backed by all of these other companies like Coinbase and used by them. So I don't like the organization of Circle at all. Jeremy Allaire is a scammer, so I would watch out for him. He rage quit Bitcoin and said Bitcoin was a failure and really shit on Bitcoin and the Bitcoin community. And then he comes back several years later, FUDs on Tether, and launches USDC as trying to get in with Coinbase and the U.S. corner the U.S. regulated market for stablecoins. That's the kind of player that Jeremy Allaire is and what USDC is. So it doesn't surprise me if they would get approved by some regulatory body in Europe, because they are part of the captured class. They are part of the administrative class. They play fair, or they play not fair. They play dirty with those guys. They have no problems playing dirty. So I would not be surprised by that. Okay, let's get into this. And I should be sharing the audio. I'm going to turn it up a little bit. Hopefully it's not too loud, but I don't want it to be too soft. So, all right, let's play.
This is something Eric and I actually disagree on. Eric was in that
spicy.
10 to 15%. Yeah, Eric was in that 10 to 15% camp, 10 to 15% of Bitcoin ETF flows assets. I'm probably in the 20 to 25% camp. He actually went to write a note and did some research and basically upped his odds from his numbers from 15 to 20. I think 25% is realistic, and that would be a successful launch in my opinion. I think people in the crypto world are looking at the Bitcoin ETFs and just expecting that to happen every time an ETF launches. Mm-hmm. And that's just not, let's be.
Notice he said crypto world. These are the crypto bros that don't think that these things are securities, don't think they're scams, have no idea about the monetary arguments, the game theory, the history of money, how things get monetized. They don't know any of these things, but these are the crypto bros that expect it to have the same inflows as Bitcoin. They're mentally gone. I don't want to
be clear. That was the most impressive launch of multiple ETFs than we've ever seen. Nothing else compares, right? So right now we're looking at 15.6 billion have come into these Bitcoin ETFs since they launched in January. So it's about almost exactly 5 months, actually. If you get 25% of that, that is a massive, massive launch and success for a new ETF category.
So I looked into it, or I crunched the numbers. I used 15 billion, 25%, 3.75. You guys can check my math. So 3.75 billion in the first 5 months is what they're on the high end of what they're expecting for Ethereum inflows. That's the numbers.
Would be the second most successful launch, basically, for an ETF category in history. So, I mean, even the numbers we're talking about and thinking about, even if they're lower than we're expecting, there's still chance for this thing to be absolutely massive as far as ETF launches go.
All right. So I responded to that, and let's see if I can bring up. Well,
This is something
I
Eric
don't
and
need
I
to bring up
actually
my tweet. I
disagree
can
on.
just talk to you guys about it. But so here's what they're missing. All right, they're missing the effect of staking. And I've looked up staking in different places. Different sources have different amounts for staking, but here's one of them. So this is stakingrewards.com, Ethereum 2.0. And we see here that staking is around 3%. It's above 3%. It does spike up here to 5%. One thing I looked at a couple months ago was saying 6 to 9%. So I don't know what they're talking about there. But if you do use MEV Boost, you can get this up to over 5%, from 3% up to 5%. So maybe that's what they were talking about a couple months ago. So you're talking, I will go with 4%. Okay, 4% on staking. Now the fees for the Grayscale Ethereum Trust probably going to be the same as what they are for the Bitcoin Grayscale, the Grayscale Bitcoin Trust, which is now at 1.5% for that ETF. So 1.54 plus 1.5 is 5.5%. That is what you're paying to keep your Bitcoin or your Ethereum in the Ethereum Trust. All right. And here is an image of the holdings. So this is Grayscale. This is from Blockstar_ADV. And they're showing the Grayscale Bitcoin holdings. And once they launch the ETF, they've just been diving, right? But what has happened in the meantime, you have big players coming on the other side of that and buying 15.6 billion more than the Grayscale Trust has sold. Now, Ethereum is going to experience a very similar, if not more violent, decrease in the ETH Grayscale Trust because of that 4% loss in the staking revenue. So if it were only the launching of the trust into an ETF and having a 1.5% fee, that's what you would see here, what happened to Bitcoin. But now supercharge that with the lack of staking income. The Ethereum that's going to flow out of this Grayscale ETH is going to be massive. It's going to be more in a percentage terms than Bitcoin. So they're down from 650,000 Bitcoins down to under 300,000 Bitcoins now. So over 50% have come out. This could be 75% or more coming out of the Grayscale Ethereum Trust, and that's going to happen very rapidly. So they have 10 billion roughly in Ethereum. So that's 7.5 billion is going to come out. Now, how much? So that means that the Ethereum that is being bought by the other ETFs has to be above 10 billion. And they're going to take an automatic 4% haircut without staking. See, there's different incentives here. Bitcoin does not lose anything in the trust or in the ETFs, where Ethereum does. It loses 4%. You can't stake it. Why would you own an Ethereum ETF if you can't stake it? Why not just stake it? So I don't think there's going to be nearly as much inflow demand as these guys are expecting. There's going to be massively more outflow from the Grayscale Ethereum Trust and massively less inflow to the other ones because of the staking stuff. So my thought on this, instead of theirs 15 to 25%, I'm saying 0 to 5%. It could even be negative. I should have said -5 to 5, because this could be very bad for the price of Ethereum. And now that can roll over to Bitcoin as well. And let me just see if that's starting to be shown in the charts actually before. Where are we at? Where is it? Okay, so Ethereum is breaking down. Let's go to ETH BTC. It's negative on the day. It's not really doing much at all. This was the pump they got from the initial announcement that it will be approved, and they have been sideways ever since. But if you look at this very recent day here, they're down 4% to Bitcoin's. What's Bitcoin? 3.5%. So I don't know. It just looks a little bit worse for Ethereum. And I was thinking maybe that's starting to sink into people, but I could be wrong there. Anyway, so yeah, that's what I'm thinking for the Ethereum effect from the ETFs. These guys are way, way too bullish. It's going to, overall, it's probably going to be a negative thing, at least for the first 6 months of Ethereum before the Ethereum Grayscale Trust is done selling. So, okay, let's go check the comments. Dex Invictus. I always remember when USD depegged during the Silicon Valley bank failure. What are you meaning by that, Dex? Let me go to the dollar. Depegged. You're gonna have to give me more information on that. So let's go back to March of last year. Is that no? We can zoom out. Got my new colors. You guys are gonna have to tell me what you think about my new colors here on the charts. Trying something different. Okay, so we had March back here during the banking crisis. It did sell off. The dollar did. Oh, you're talking USDC. Okay. Yeah, that's I really dislike USDC, but they are very compliant. I don't dislike them as an actual stable coin. I think that they, I'm not going to scare people that you're going to get rugged or anything from USDC. I think they're very compliant. I just think the company itself is nasty, and I would much rather hold Tether than USDC. I would actually be, if I were like doing illicit things, I would be much more hesitant to hold USDC, or even things that in another country are legal, but to the US might be nefarious or illicit. Then I would be worried about holding USDC much more than Tether. So that's what I would have to say. USDC dropped 17%. New colors are colorful. Yeah, I don't know. I wanted to darken it up. A lot of people on Twitter and stuff, they're using the darker colors, and so I thought, hey, I'm gonna darken it up and see how that goes. See how I like it. All right, let me check out Telegram and see if there's any comments there. No. All right. Well, guys, that's where I'm going to end it for today. Thanks for joining me. Make sure you check out bitcoinandmarkets.com. Sign up at least for the free tier. That way, if you are a fan of BM Pro and you want to keep in contact with me no matter what, you can always find me at bitcoinandmarkets.com with that once a week free weekly newsletter. And then you can check out other ways to support the show. Check out the price forecast competition. This is unique in the space. I don't know if anybody else is doing that. Maybe it's because it's not on the up and up, but yeah, it's fun. It's a little perk for people. So check that out. Appreciate everybody that supports over there. And I'll see you guys on the next one. Bye. Oh, yeah. Have a good 4th. Dex, thanks for reminding me. Everyone, have a great 4th of July, and I'll see you on the 5th. Peace.